Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, go over a lot of information that people are sharing. It's going to be commodity related, wealth building, or financial topics. If you want to follow me, you can follow me at finding_finance. And we are running a special at finding-value.com if you want to dive a little bit deeper into individual companies in the energy sectors, commodity sectors. I really cover the commodity sector because that's where I think the value is at. We are running a 50% coupon code called September. Coming on down, we got Uranium Insider, Justin. He's saying all-time record daily volume for newcomer URNJ with an hour to go. So what does this mean? The volume is how many people are buying this. Generally, volume indicates interest in a stock. It indicates accumulation, especially if it's lopsided with a big green candlestick like we've got. Justin said this before, and I do think there is some validity to it. He talks about the flywheel effect. What is the flywheel effect? So basically what happens is momentum gets generated in the stock. The volume kicks up, and when money vastly comes into the sector, especially into these ETFs, the ETFs have to buy more stock. So that money that comes in, they have to buy more stock, which then pushes prices higher. And then it starts a flywheel where people look at the price, they put more money into it, and then the stocks that it holds goes up as they buy more and more of those stocks. One strategy that you could look into is you look at URNJ, you search for it on the internet, and you look at their web page, and you can look into what composition they hold in that ETF. And you could invest in some of the individual companies that the holdings have for URNJ if you're interested in doing that. What I do is I do look at the holdings of URNJ, URNM, and all these different ETFs. And then I look at the chart patterns and see if there's good entry points into the individual stocks. Generally speaking, you can outperform the ETFs to some degree by doing that. One thing I will say is URNJ is a very good ETF in terms of leverage. It's got a lot of upside leverage to the price moves. So one could try to beat it, or you could just say, you know what? I'm happy with URNJ. Here's my post. It says, here comes the outperformance. And what I'm posting here is UX1 versus the S&P 500. Momentum down, sideways, and then we are just breaking out here to the upside where uranium, the futures pricing, could outperform the S&P 500. So what does that mean? Well, one, it's telling us that commodities, and especially uranium, is coming into favor, and that we could see a big outperformance of uranium. It is no surprise that we've got the momentum coming down, the momentum going into a basing pattern, and then a break of the basing pattern, which happened in early of 2022. And I know a lot of people, they've been incredibly frustrated with uranium and the consolidation that it has. What I'm going to tell you is a lot of the markets, when they're early in their bull market, they consolidate a lot. It's pretty boring and it's pretty rough for a person who is impatient. Then towards the back end of the bull market, momentum accelerates and things start to move more rapidly. We could be entering that moment where things start to accelerate more rapidly. I think we have. I don't think the pullbacks will be as long or as deep in terms of deep and long. They could be shallow and deep, but they won't be as long, I don't think. That is my opinion. Obviously, what we're going to find out what this bull market's got, but it looks very good here for an outperformance, and uranium against most other assets looks very well positioned. This is ASX, the Australia market. So the Australia market, since they are ahead of us by almost not quite a day, but they're offset by about half a day or so. They're ahead of us by half a day. You can see that the uranium stocks, at least at the open, have some momentum, and they're up. Obviously, some are down, but they're not really down very much. So the majority of uranium stocks in Australia, hopefully they finish strong. It's not how you open, it's how you finish. So I know a lot of people, they'll look at the opening and they get all excited. It's not how you open, guys. You want to finish strong. You want the big green candlestick that ends the day strong. That's the best green candlestick that you can have, which we do have. So this is it, URNJ. You want these green candlesticks that look exactly like we have. Even with the gap up, it's fine as long as you're finishing strong. So URNJ looking fantastic. We had a nice strong finish in URNM as well. They're looking very good. So hopefully that momentum can continue. Scrolling on down, we've got U.S. home prices are on the rise again per Bloomberg. Why is this important? I know this. A lot of people are interested in commodities. Well, the house prices are a form of where credit expansion exists. We're also getting fiscal spending, which is also demand above supply. So I talk about credit demand or currency demand. They're the same thing. So when U.S. home prices, they're on the rise again, we need to build more new homes. And that credit that goes against those new homes is another effect that's going to affect the demand for assets and the supply of commodities. And it's going to rotate all this money with higher interest rates. So that's what's really driving a lot of this. So I always look at the driver, which is U.S. home prices, or I should say the volume of housing starts, not prices, but the volume of housing starts is the driver of all of it. This is URNM versus UX1. We can see a breakout here. This is from Uselink, and we've got a nice little downtrend break here, and it's starting to accelerate. So what does this mean? It means that the equities are being favored over the futures pricing, and we're getting an outperformance in it. Generally speaking, that's when you get bullish on equities. So URNM outperforming against the futures pricing looks fantastic. Here's one also to think about. Technology stocks now reflect a record 25% of all equity fund assets. Just 8 years ago, technology stocks only reflected just 9% of all equity fund assets. Meanwhile, 5 stocks currently account for 70% of the NASDAQ gain this year. Technology stocks have become the backbone of the stock market. Is AI going to spark the next bull market? I don't think so. So why am I sharing this? Well, the money is all over in technology right now here, guys. It's all over there. And you know it's going to rotate over to our sectors? This money here is going to rotate over some of it. Not all of it, but some of it. And it's going to bring it back more towards historical levels, which might be more like 9% or 8% or something like that. This is going to come back down, and it's going to transfer over into commodities. This is fuel for our sector. You don't want to be in sectors where all the money is at a historical high, like the tech stocks here. This is at a historical high. If it's 24% of the equity fund sector, that's really high. You don't want to be where all the money's at. You have to go and invest where everyone is not. And then you wait for this rotation of money to come back into your sector. So the way that I view this is future buying power for our sector when this money starts to rotate. And what causes the rotation is higher interest rates. Now, it might not be tomorrow. It might take some time. So be patient. We got to be patient. Longer term, blue is the cost to build a home. Green is the price of the home. So blue is the cost. Green is the price. Look at the basically how well they're matched. The evidence here. If you look as the price of the inputs for residential construction go up, you can see the home price go up. What we're looking at here essentially is the cost curve to build a house. And home prices are going up because if you're short in the housing market and the cost to build new homes continues to increase, well, that's your cost curve, guys. You have to have the price of homes go above the cost curve. I don't hear anyone talk about this really. And if the price of homes continue to go up and we have to build a lot more new homes, they're probably going to just be smaller homes. That's my guess. People are going to have to settle for less. Here's Meg. Meg Energy is a oil sands producer up in Canada. We can see a clear breakout here, guys, to all-time highs. This is a triple top breakout. I'm sure that we're going to see a much higher projection on this. A lot of the times it's going to be the leg coming in and then you put a leg on top of it. It's going to be a lot higher than where it is today. We've got Bitcoin and crypto grief were avoided. So this is the chart traders over 2 years ago. They were eyeing commodities over Bitcoin. And perhaps commodities will outperform Bitcoin here. That's the hope, because that's where I've got my money is all over in precious metals and commodities. Cold showers will not make you successful. I read all these things on Twitter, and it always says, "Oh, I take a cold shower. Oh, I do this." I just thought it was funny that this guy puts up there, "Cold showers will not make you successful," which is true. This chart is of zinc prices going back almost 200 years of history, and it's fascinating. Note how the surge in prices started when the gold standard ended, making a departure from monetary discipline. Also, despite the volatility, zinc appears to be at the lower end of a major uptrend in price. Central banks are ultimately trapped, and this is not the time to bet against hard assets. So the end of the gold standard happened in 1970, and you can see all the volatility in zinc prices even. And it looks like we are consolidating. We're at a very low point of a trend line where we could consolidate and then maybe break upwards out in the future. For zinc, picking multi-baggers isn't hard. Letting them turn into multi-baggers is. That is going to be a very difficult thing for a lot of people. I've been riding my multi-baggers for a while here, and I'm just continuing to hold since 2020. I've endured some pretty bad pullbacks in my bigger positions. Companies that have pulled back 50% from 30 baggers, 35 baggers that have pulled back 50%. A lot of people think, oh, well, that's easy. You're up. Okay, sure, you can think that, but I'd love for anyone here to try to do that. You've turned tens of thousands into hundreds of thousands, and now you're seeing a $100,000+ pullback. Not that easy, guys. I'd say it's very difficult. You have to grow emotionally with your money, and it's very hard to play the entire valuation move as the commodity bull market progresses, because your account values get much, much larger. That is something that if you need emotional help, join our community. We're here to support and help each other get through this thing. Obviously, some of these pullbacks, I know it sounds bad or I know it's emotionally hard, but it's actually really good times to accumulate more. And I know that sounds weird, but that's the way you make a lot of money is you have to almost do opposite of what your emotions are telling you to do. It says the metals mining company's ETF XME broke out higher last week versus its parent index SPX. So this chart is now on the move after backtesting. Above black line, think XME will move strongly. If you look at this, guys, this is a double bottom. If you've been a part of the channel, I've gone over a lot of ideal entry points. I'd even draw it like this across. But it's a lead-in pattern, the double bottom. Then we have a breakout, a retest, and we're right there ready to rip to the upside. So this is the XME, the Spider S&P Metals and Mining ETF compared to the SPY. Commodities bull market, which was the low in 2020, that was a really good entry point for anyone that was looking. And now we still have an excellent entry point with a lot of upside potential for this ratio for the metals and minings ETF to outperform the S&P 500. The S&P 500 and the NASDAQ and the bond market will be the fuel and the money that rotates into our assets. 7 steps to financial freedom: emergency fund, no bad debt, side hustle or hustles, streams of passive income, invest in assets, network with the 1%, and budget. What did I miss? I think that's the majority of it. Looking at FUU, FU me? No, FUU, getting ready. So this is a F3 uranium. It's ready to break out here. It looks fantastic. Most uranium companies, they all look really good for the most part. So here's top 1% net worth by age. I don't know how old you guys are, but I'll choose mine. You got to have about 8 million in assets to be in the top 1%. I'm not there at least yet, but hopefully I can get there. Hopefully I can surpass this entire net worth at any age group by the end of the commodity bull market. I don't know if I can do it. We'll find out. It doesn't matter. I'm just trying to get somewhere around that, whatever range where I can say, you know what, I don't really want to do this. Kind of that money where you can do whatever you want. And this amount, I think, definitely could do that. That's for sure. What's the most valuable trait in successful people? In successful people, I think the most valuable trait is being able to learn and having motivation. So motivation and the ability to learn, and you will be deadly. So if you can learn something, especially very quickly, like you're really good at learning new things, and you have the motivation to continue to forge through bad times, those two things make you deadly, and you will be successful at some point in your life because you'll continue to pursue success. And it takes motivation and ability to learn. I think those are the two most valuable traits that someone can have. And that's mainly the people who succeed at work and what I look for when I hire people. It is motivation, someone who's self-motivated, and the ability to learn. Do you think it's better to pay off debt or save for retirement? I think it depends on the debt that you have. And you can do both. You don't have to be one or the other. If your debt is your home and that's the only debt you have and it's a fixed rate debt at 2 point or 3 point something percent, I would say for retirement and leave that debt to be inflated away. But that's me. There's also psychological impacts that people don't like debt. So I'm compounding my money as much as I can and leaving that debt on the books. That's what I'm doing. And I am putting the majority of my money in this commodities bull market and precious metals and stuff like that. So for me, I think it's better to leave the debt that I have, let inflation eat it away, and put my money towards retirement or towards retiring earlier. But that's my opinion. That does not mean that if I had to pay, credit card debt, I'd probably pay that off as quickly as possible. I don't carry any of that high interest paying stuff. I'm guessing you've all seen this. Showing together, though, they look even more impressive. When these break out, things will change. This upper portion is silver and this bottom one is platinum. They both have an inverted shoulder head shoulder developing. It's a massive inverted shoulder head shoulder. So when they break, we're going to see some big moves, I think, out of both of these metals. There's a lot of silver producers too, small silver guys that are really, really cheap right now. And not a lot of people are talking about silver and platinum. I mean, I do. And on this channel we do. But not a lot of people in general are looking at these two. So I would be looking. I would be watching them like a hawk, and I think an opportunity is going to come where these break out, and I would be on top of it. That's all I'll say. Global inventories relative to a normal baseline are now lower than June 2022, even after the largest releases of strategic political reserves in history. If we're directionally accurate on the path forward, ongoing draws should pressure the oil price higher. So we're coming on down here, guys. We're below the SPR release. So SPR release was at $120 a barrel. Inventories are now below that. This is going to be good for oil. This is going to be ridiculous, guys. If you're part of the channel, we're positioned for this, guys. We're in energy service. We're in oil and gas. We're in uranium. We're looking at precious metals and all that stuff. There's a huge opportunity there. And this is all coming to fruition right now. All of these are coming to fruition. It says, what's your strategy when it comes to investing? Can you summarize it in just a few words? Yes, 3 pillars: ratios, market conditions, and technical analysis. Those are my 3. That's my strategy. And then I look for where we are in the real estate cycle. I suspected this would happen. SPUT has now broken out big time. Called the bear market low back in 2020, and the uranium miners did 500% in its baby bull move. This commodities bull is and will be end of the rainbow stuff. He's completely right. Grady has been calling this shot by shot. I agree with him. I found him through our similarities with commodity bull market thesis. It says we nailed the major lows and highs at the service for the sector since March 2020 lows. Try doing this without charts. Yeah, you can. Coming on down. And that's it. That's what we've got for today, guys. So hopefully you guys enjoyed it. Give me a thumb up for the content. Subscribe to the channel if you haven't. Subscribe to the website if you'd like. Love to have you as a part of our community. We do have a Sunday 5 p.m. Mountain Standard Time question and answer session where you can ask whatever questions. It can be anything. It could be related to uranium. It could be related to any of these energy sectors. It could be related to just questions about investing in general. If you're brand new, it could be questions about opening a brokerage account. What I prefer, what's my favorite ones. I'll let you know what my opinions are. I can't do one-on-one, anything like that. But you can follow me. You can see what I'm buying. I did update some buys on the website already, and I've been going after a little bit more risk in some of these sectors here recently. All right, guys. We'll catch you later. This is Finding Value.